Throughout the 1980s, the green and gold logo of the Bank of Credit and Commerce International, or BCCI, was a fixture in over 70 countries. To the public, it appeared as a modern global empire managing more than $20 billion in deposits. Investigators later documented a different reality behind those office branches, a clearinghouse that moved billions for drug cartels, illegal arms syndicates, and corrupt world leaders. In the standard global financial system, banks are tethered to the sovereign governments where they are headquartered. These institutions are required to open their books to national regulators who monitor transactions and ensure legal compliance. Aga Hassan Abedi, the bank's founder, realized that moving illicit capital at scale required a structure that removed sovereign governments from the equation entirely. Abedi incorporated a specific structural flaw into BCCI from its first day of operation. He ensured that no single central bank or government on Earth had the legal authority to audit the bank's entire global footprint. He split the bank's holding structure between Luxembourg and the Cayman Islands, jurisdictions chosen for their strict corporate secrecy. When regulators in London requested balance sheets, they were told the accounts were held in Luxembourg. When Luxembourg inquired, they were redirected to the Cayman Islands. BCCI functioned in a space between national laws. By shuttling billions between fictitious entities and offshore subsidiaries, it operated as a stateless clearinghouse without ever submitting to a single unified audit. Because the bank operated outside normal government oversight, it became the primary financial tool for actors who needed to move capital without a public paper trail. The Medellin cartel used the bank's private division to process hundreds of millions of dollars. Couriers delivered duffel bags of cash directly to branch offices in Florida and Panama, where the bank converted the illicit paper into pristine international wire transfers. This same pipeline serviced international arms dealers and corrupt dictators like Panama's Manuel Noriega. The CIA later admitted to using private BCCI accounts as an untraceable financial pipeline. These accounts were used to fund covert geopolitical operations and channel money to rebel factions during the Iran-Contra affair. By servicing both sovereign intelligence agencies and criminal syndicates, BCCI had moved beyond traditional banking. It was now the monetary engine for global shadow warfare. To complete this network, BCCI needed direct access to the United States domestic banking system. Because American regulators had explicitly blocked BCCI from buying U.S. banks due to its opaque structure, the bank orchestrated a clandestine takeover. Using wealthy Middle Eastern figureheads as frontmen, BCCI provided hundreds of millions in off-the-books nominee loans to secretly purchase First American Bank shares, the largest bank holding company in Washington, D.C. To protect the operation, the bank recruited former Defense Secretary Clark Clifford to serve as chairman. His presence provided the legitimacy needed to keep Federal Reserve regulators from noticing the offshore control. A rogue offshore syndicate now held secret operational control over a major financial institution in the heart of the American capital. Despite its multi-billion-dollar facade, the entire bank was functioning internally as a massive Ponzi scheme. This visualization shows how the bank disguised massive bad loans made to insiders. They fabricated transactions and moved fresh customer deposits from one branch to another to fill balance sheet holes in their offshore labyrinth. The collapse was triggered by two separate investigations. In the US, federal agent Robert Mazur infiltrated the cartel's money laundering wing, while the Bank of England launched a classified global audit codenamed Sandstorm. On July 5, 1991, regulators in 7 nations simultaneously raided BCCI headquarters, seizing records and freezing branch operations worldwide. The stateless design that once protected the bank from individual audits meant its collapse was total. The bank fell with over $10 billion in unrecoverable liabilities. The collapse wiped out the life savings of over 1 million innocent retail depositors across 70 countries. While the depositors lost everything, the principal architects of the bank vanished behind the international borders and jurisdictional loopholes they had spent decades exploiting. The story of BCCI shows what happens when sovereign nations allow offshore secrecy havens to exist above the law. In these voids, the financial system stops protecting public wealth and instead becomes a tool for black capital.